Hey everybody, welcome to the game plan. My name is Gareth Soloway, and of course I'm away again, but still here to give you your game plan. All right. So whether I'm in the studio or not, I am monitoring the markets, monitoring the charts, and making sure you guys know the levels to watch in the market, in crypto, commodities, as well as individual stocks. So without further delay, let's get right into the action today. Here's the S&P 500 or the SPY 10-minute chart, right? So this basically was where we closed yesterday right here. This was after hours yesterday until 8 o'clock at night. And this is where the market reopens here on the SPY or on the markets for individual stocks and ETFs at 4 a.m. Eastern time. Notice again, we were down generally. We sold off more early this morning and we're creeping back up just a little bit. So all in all, markets are opening lower on the day. All right, now flipping over to the daily chart, what we see is that the S&P or the SPY here is still at a very pivotal level, right? So if we zoom out, we can see where these trend lines come from. A trend line here starting back in July of 2023, connecting to our high in July 2024. So that was a year between hits of this trend line. It then kisses it here in November, tags it again in December, and that's where we put in our high where we've gone sideways, right? So we've come down, we've bounced up, we've come down, we bounced up, come down, bounced up, right? And then we've hit on this underbelly of this flat top right here. And again, the reason why that's important is this is a breakout level if we can get above it and confirm. Right. So if we get above it and confirm, what do we know? We know that the probabilities then would favor a move to this upper level right here, this trend line, which again, we were hammering this trend line prior, right? So if we zoom out again, here and you kissed it here and here. So if we break above here, we likely probability wise would head back to that level. However, we have not broken that level just yet. Now, the bottom trend line is the key support. This support level goes back to October of 2023 through the low from that August big sell-off that we had in 2024. And we even kissed it right here in early January. January 10th, actually make that 13th. We hit it and bounced right up back to those highs, all-time highs on the S&P. All right, so suffice it to say, we have our very defined levels here. As long as we stay between these two lines, it's chop, right? It's down a little bit, up a little bit. And you can see it here. Open lower, rallied up. Open lower, rallied up. Even over here, down and then back up. So again, for me as a technician, I'm monitoring very closely to see, do we break above it or do we break below it? If we break below it, there'll be stopping points along the way, here, here, and probably down in this area. Those will be supports. But again, for me, the bigger thing would be the break of this longer pattern. Right? When you break a longer pattern like this, it tends not to just be like a little bit of a downtick to here and then rally right back up. It tends to be a more significant break that can actually create some major downside action. So again, that could be the start of a bear market, for instance. In fact, in 2021, something like this exactly was. All right, flipping over to the Nasdaq 100 chart, much the same in terms of charting. The only difference, instead of a flat top like the S&P has, this one has a down sloping line. And that tells us again that some of the big cap tech names have been a little bit weaker. It also tells us that the rally in the markets has been a little bit more broad based because again, otherwise the Nasdaq would be hammering on this flat line right here like the S&P versus it is not, right? But same thing applies. If we break above here, you at least go to double top and maybe to your high here. And if we come down and we tag here, this will be support. But if we break this, that's where you get your bigger sell-off to the downside. All right. One chart I wanted to go over today was Nvidia. Nvidia had a big day yesterday. Pre-market, if we flip over to the pre-market action, you can see it was down significantly. It's come back up. It is trading basically just slightly lower on the day. So it closed right here, trading down just a little bit. But the reason why I want to bring this to your attention, fascinating chart here. So we can see that the highs were marked clearly by a trend line right through here, right? So we can put a trend line right there, stretch it out, and put it in right there. So again, you have your high pivot, and you pierced it. It tried to break and it got rejected. Then it retested right here. And look at that wide range reversal candle. That's a nasty reversal candle right here. On a technical analysis basis, that is a huge signal when it engulfs the previous day, opens above, and closes well below the gap fill. That, again, on a technical basis, does major, major damage to the chart. But having said that, we then broke up, down, then up, and then had a bigger breakdown. Look at this, folks, here. So if we take a trend line and we bring a trend line over here and we drag it through, look at the highs yesterday. Look at this, guys. So notice how we broke. So here's a trend line, pivot low to pivot low to pivot low. We broke below, right? And then look at how yesterday it tagged that line and got rejected. So again, in the short term, this is rejection here. This is a resistance point. And based on what we know of time counts, 1, 2, 3, 4, 5, 6, we're coming into a day today where it actually signals there could be some downside action here. All right, now if we zoom out, look at this, guys. If we take this low and we connect it to this low, look at this, right? So we have low pivot to low pivot, and look right there, it goes right to there. So the market, I guess the big point here, right, is that in essence, the market is a combination of trend lines that create resistance and support. And so you guys will see that in my charts, I really don't have a lot of crazy indicators. Occasionally, I'll look at divergences on the RSI. Occasionally, I'll look at VWAP and a few other things. But for the most part, I keep it super simple. Use your trend lines to tell you where is going to be resistance and where is going to be support. And by no means, by the way, is it like perfect, right? So if we flip back to the charts, it's not like you can't break above a level or break below a level. But if you understand the essence that it is probability based, then you start to say, okay, I have probabilities that favor a pullback here, all right, that favor a rally up into the scene of the crime here, but then a rejection here, right? And that's where you start to kind of gather that information to not be right all the time, but to be right just most of the time. And in this game, folks, I'm telling you right now, institutions are not right every time, right? Only insider information people, right? I mean, we know a few of those people out there in the media and so forth. But the point being is that in general, even institutions, they're going to be wrong sometimes. It's about being right a majority of the time. All right. So again, the idea here is we should see a rejection of Nvidia if it does break above here, and we always want to look at the what if case, right? So like always, probabilities are not 100%. So let's say it does break above and close above today, then you have gap fill right here at 142.50. Now let's go to Tesla's chart real quick here. Tesla again breaking lower yesterday. It got below my first initial support. Today I'm going to be watching like a hawk this area right here. These are your next two big levels. I went over them yesterday in the game plan, 345.25 and 320 approximately. And again, the idea being is these are both gap fills and you're starting to get into this sideways chop. If we look at the pre-market on this, it is down. Tesla is down a little bit. And I explained yesterday, I mean, again, I think investors are starting to get a little concerned. We know that EV sales have really had a decline for Tesla. Granted, Elon said that they would reverse and do better in 2025. But Elon, again, is focused so much on Doge, which, listen, I mean, that's not a bad thing necessarily. But the idea is that it's taking his focus away from the stock, and that makes investors nervous. So here are my next two levels. These are only short-term trading levels for me. At this point, I have no desire to be a swing trader on the long side. Maybe down here. Notice this high pivot aligns with this, and then there's a gap fill. This would be somewhere where I would start to nibble on a swing trade basis on the long side. Now, we do have some stocks moving in the pre-market here. Shopify. Wow, look at that fall on Shopify pre-market, but then look at the bounce. So incredible dump out from a close yesterday on Shopify at 122, went as low as 106. Wow. Before a big snapback, the stock is now not down very much now. But if we take a look at this chart here, let's just see what it looks like. So in the scheme of things, it's been grinding higher. But then if we zoom out to 2021, you can see it's not even back to its all-time highs yet. So again, that is kind of keeping it under wraps. And the stock again today is selling off. Now, again, for me as a trader, this low here. So we know it got to about 106, right? So 106 was right here, approximately this gap fill, which is 107. So that'll be support if it revisits that. But really for me as a trader today, if somehow it gets down to 100, this little low pivot, the even number. Use the even numbers to your advantage. There's psychological levels that people will put stops right at 100, so they like to flush it right below, take out those stops, and then it bounces back. And also the pivot low is right there. So if by chance it got down to 100 today, that would probably be a good trading level. On a swing trade basis, potentially gap fill here down to about right here. So you're looking at anywhere between $89 down to about 84. That would be a start to accumulate in a swing trade zone, in my humble opinion. All right, now let's flip over to let's take a look at Bitcoin. Now, by the way, folks, just to reiterate here, so before we get into Bitcoin, just a reminder, we have the PPI data, which is Producer Price Index, on Thursday morning, and tomorrow morning we have CPI. So, in all fairness, the markets today can be kind of quiet. They could be a little on the quieter side. Investors may be a little bit nervous going into that inflation data because it is so important. But the idea here again is that, we're looking at a market that is kind of worrying about inflation. So these numbers are going to be big. And then obviously investors continue to pay attention very, very closely, right, to the idea that, we're watching for new tariff news. Is there any new tariff news? All right, let's flip to Bitcoin here, guys. Again, Bitcoin, it just continues to chop. I was pointing this out to members yesterday. How many times in recent history have we seen 4 days? I think this was Thursday, Friday, Saturday, Sunday, where price literally ended almost exactly where it began for 4 straight days. Monday, we had a little update. Today, we're seeing a little update here as well. But really, in essence, you're just stuck between this level and this level. Now, the reason I'm keeping this on my screen, this upsloping parallel, right, is because it's already shown that it's important, right? So here you hit here on the yellow line, you broke through, but then look, you hit it on the underbelly, hit it on the underbelly, kissed it on the underbelly, hit it again here, so that if we break above 108, 109,000 right here, right? So if we break above here, then you likely go up to that level and hit it again and then get rejected. On the downside, we know our level very clearly here is around 91 to 92,000. So this is the area here where the focus will be, and I'll continue to monitor that. Now, I did want to show one other chart because, again, I haven't gone over this in a long time, but the reason why I called the 108,000 area as a major pivot top is because if you go to your Bitcoin chart and you go out and you zoom out on your weekly, I want to show you this. This is how I came up with that. It wasn't like rocket science. I want you guys to be understanding is that what I'm doing is not like you don't have to have an IQ of 175, right? I mean, this is stuff that anyone can do. I just play connect the dots like I did when I was a kid, right? It is ultimately you take your high pivot here from 2017, you connect it through your highs of 2021, extend that line out, and literally you get your highs right here. I mean, notice again what's so crazy about this. We made the first high at 108. And then we went a little bit higher. Remember, we went to like 109, and that was because the line was a little bit higher, and it rejected it again. And so the potential here is to just be clear. And this, listen, there's nothing that says it can't go higher. And by the way, look at the parallel down here. Perfectly aligns right along here. But the idea is that as a technician, until this level's broken, what can I logically deduct from these past highs? Major high of a bull market, major high of a bull market correction, another high in the bull market, and bigger correction. And so here you have 1, 2 again. And at this point, until proven otherwise, we know that this could be a major top on Bitcoin. I know bullish players don't want to hear that, but again, my job isn't to speculate. It's to just say, okay, what has happened historically, and therefore it has precedence to potentially tell us something about this chart now. So again, those are the little things here. By the way, Ethereum continues to underperform here. If we take a look at Ethereum, basically it had the big flush down here. You can see the support here and this upsloping line merging. We got a bounce here. This is still the weekly chart, but if we go to the daily chart, you can see you're creeping up. Huge resistance on the daily now at 3,000. Down sloping trend line and flat bottom here. We broke down here. So therefore that level would be resistance and this area support. So resistance 3,000, support will be about 2,100 on Ethereum. All right, let's go to gold here. Gold in the overnight. And this is really interesting, guys. So look at this. Now, again, this was a big pop overnight. We got as high as around 29.44, and now we have a reversal. Now, we didn't tag this upper line. That's okay. Not a big deal. We could pull back here and then go back up. But I've been watching for a signal because gold has been very, very overbought. In fact, in my smart money commodities and miners service, I actually initiated short on GDX. We've gone short gold right up in this range over the last couple days. And the idea being is that it's oversold. It's getting to the indicators are all signaling oversold. Oh, excuse me, overbought. I apologize, overbought. And now this, if this holds today, this is a topping tail. And topping tails are bearish reversal signals. And what are the categories of a topping tail? Well, number one, it has to be at the highs of recent history. This is all-time high. And you have to have a long tail on top or wick, and it has to close in the lower 25% of the candle. So we have to obviously see if that happens. Does it close here today? Does it close somewhere, let's say, below 2,900? But if it does, then you have a topping tail, and the probabilities now flip to a reversal to this level, which would be a retrace to the scene of the crime, right? Former pivot high becomes technical support, and if that were to break, then right here. But this should actually hold. This will be where I cover a lot of the shorts on gold here. And you guys know, listen, I'm a huge bull on gold. If you ask me mid to long term, huge bull still. Still think it's going well over $3,000 an ounce. Doesn't mean I'm not going to swing trade it in the shorter term, right? I'm a swing trader. All right. So again, I have my long term position, sure. But my swing trade, again, now signaling short, and I am short in the services with members. Let's look at silver. Now, silver's been struggling. Again, silver now ducking down. Notice this level here. It could never break through, and down it comes. So it again, it had this bullish pattern. It broke out, retraced, then went up, hit resistance, which was this former pivot, rejected. Now it should come here. If it breaks here, you actually go all the way down there. By the way, palladium, we could take a look at palladium real quick. I know a bunch of you guys love palladium. I actually do too. Palladium's on the verge of a potential little breakdown here. So just be aware, like silver, if this really confirms below this upsloping line, it could go back right here around 858, 850, give or take. This is a huge level though. And then notice how this trend line, these two trend lines are coming close together. This to me becomes a very major accumulation zone right here if it gets there. So I'll be watching very closely on that. Oil, guys, again, you know I'm out of my shorts on oil, and that continues to be the right decision. I didn't get too greedy on it. We took it off right over here. It then pushed a little bit below and then has now started to rally higher. In fact, some of the oil services plays and drillers, they actually look pretty bullish on the charts. Now, the question is, how high can this go? The level where I start maneuvering for a short on this again would be using this high to these lows. There's a 618 Fibonacci right at this area right in here. That would probably be right around 77. I would start nibbling again, knowing that I have protection right up here, major resistance, and again, expecting overall a weaker U.S. economy over the next 3 to 6 months. Now, the only caveat here is, and this is probably why oil is getting a bid, is because you also have China that's starting to put up a few economic numbers that may tell us a turnaround is coming. And if we look at something like Alibaba, you can really see, look at the run on Alibaba. I mean, that was an incredible move yesterday alone, but this has gone from $80 to 112 in a matter since January 13th. I mean, that, and by the way, I literally said to you guys, this is the play, the Chinese plays. Now, these have run. I mean, listen, you're not, at least listen, I'm not buying Alibaba up here. I was in down here and we already took profits. I took it a little early. It is what it is. That always happens or generally does. But the idea is at this point, you got to wait for a pullback, a retrace of sorts, and then you look. I would be a buyer right here. See this little pivot in the middle, right around 94? That would be where I would inch into that play. All right, next up, let's take a look here at natural gas, and we'll summarize here. Nat gas, ooh, it's getting close, guys. It is getting close to a potential shortable level. It is following that up, those trend lines I drew in. I just want to see it get to about 360. If we can hit 360, I likely initiate a short position on natural gas with the idea is that, again, this would be a classic. Here's your parallel, pretty much parallel, right? You broke down, you confirmed, retraced to the scene of the crime. Again, probabilities doesn't mean it's going to happen, but probability wise, it favors a break to the downside. All right. So again, that's really the keys here as we continue through. And I will obviously update you guys throughout the week. Again, I'm on vacation, kind of a pseudo vacation. I always work on vacations, guys. I love, and it's not because I have to. I want to make that clear. It's because I love what I do, and I love bringing the information to you guys, and I love doing my best to educate. And I love trading, frankly. I love charting. It's amazing how you can predict with high probabilities what will happen. And again, that's what verified investing is all about. It's data and charts, not emotion and narratives. Like you go to the mainstream media for narratives, you go to social media for hype. I really want this to be, full and fair disclosure. I'm not right all the time. I have plenty of losers out there, but do I win more than I lose? The answer is absolutely I do. And that's the name of the game, right? You want to win a high percentage, 75, 80% of the time. If you can do that, you're golden. All right. Thanks as always, guys. I really do appreciate you guys hanging with me while I'm on my vacation. I'll keep you guys updated. Take care.